So the reason why I stopped trading the Nasdaq, I'm making this video for prop firm traders because I utilize prop firms a lot. I think they're very useful. Um, and also, if you're trading a live account, this is also you could also learn some from this video as well. Especially if you're trading a live account with less than 20k, then you're probably gonna want to watch this, right? So this could help you a lot. I stopped trading Nasdaq because of the risk. The risk on Nasdaq is just too much, and you guys know, traders out there, you guys know that when you're placing your stop loss, sometimes you have the luxury of getting a really tight stop loss. But ideally, what you're trying to do is you're trying to place a stop loss where it makes no sense for you to still be in that trade after price passes that level, right? So sometimes that stop loss can be 10 points, it can be really small. Sometimes I've been in trades where my stop loss had to be 100 points, you know? So it ranges. My average losing trade is like 40 points on a stop. Now, because it ranges, you can't always get a perfect tight stop. The risk on Nasdaq can just be too large, especially for new traders out there. So you just got a new prop firm, or you just got a new account, or you just funded your account, and you have a stop, and you're a new trader, or your mind is not attuned to the nature of the game, and then you take a loss, and say you risked 50 points on that trade, right? You just lost $1,000. So now your psychology is kind of fucked up because you didn't bargain, or you didn't, take into accountability the fact that you could lose $1,000, which now leads you into a spiral for, over trading or just trading on a tilt. So the risk on the Nasdaq is just a little bit too large, in essence. So that's one thing, is the psychological part. The other reason why I said risk is your prop firm is always going to have like a max drawdown or a daily drawdown, which you cannot breach, and if you breach, you lose the account. And I think that's when you, or rather, when you have or you're trading an instrument that is so like has such a large tick value or point value like the Nasdaq, which is $20 per point, then one loss can go 50% of your max drawdown. If that's what you're trying to do in an evaluation, you're risking 50% of your account. That's calm. But when you get to the live funded phase or the sim funded phase, you don't want to be taking those type of large risks. Ideally, that's just too much. It's just too much. You don't want to lose 50% of your account on one trade. You don't want to lose 60 or 100 or 80% on one trade, or even 40% on one trade. You know? And the thing about it is that not only do you lose that capital, but you also psychologically lose, because then your mind starts to think, oh, how can I get it back? How can I get back to break even or equilibrium? You know what I'm saying? So, like I talked about earlier, about the luxury of having tight stops and sometimes just having to have a wide stop, because you need to account for the fact that price should not pass a certain level. That's why you're putting your stop up there. We're traders, right? So you're putting on risk in the market. There's always that probability of someone taking the other side of that trade, and it can't go there. If it does go there, you're trading an instrument like the Nasdaq, which has a large stop or a large point value. You're going to lose more than you can actually swallow, right? So that's the reason. That's the one out of two reasons why I stopped trading the Nasdaq. Now, obviously, if you're swing trading, it doesn't really matter, right? But if you're day trading, and some of you are actually decent day traders, but you haven't gotten to the point where you have that type of precision to get to have real small stops. For me, I execute on the 1 minute time frame. So I'm booking my trades on the 15 minute, but I'm executing on the 1 minute time frame. I have the precision a lot of times to have really small stops, but even at times my stops are still wide just because of the volatility in the market or for technical reasons. And when you have those type of situations, what you don't want to do is to be risking more than you can afford to take, you know. And the second thing, I just want to show you guys this real quick. The second thing is the fact that when you have such a large stop, or rather, the second thing is another strategy I discovered was that you could trade with another instrument. For me, it was the Dow Jones, which is only $5 per point. And when I'm executing on that time frame, on my time frame, and I'm executing on this instrument, I have wiggle room to size up, right? So now, for example, I can take the exact same trade. That is, let me draw it out for you. Let me draw what I'm trying to show you, right? Let's be authentic real quick for a second. So this is the price movement, right? This is price. This is price, right? Say you're a breakout trader and you're trying to trade the breakout. You're trying to trade the break and retest, right? So you're saying that, when price gets back to this level right here, I'm going to buy, right? So say, for example, you're trading the Nasdaq. You're trading a large instrument, an instrument with a large point value like the Nasdaq. Right? $20 per point. When price does get here, you're going to buy at this level, right? And then you're going to place your stop loss right here. By the time you calculate that risk, what I'm trying to say is this. By the time you calculate that risk, this may be equivalent to like $1,200 on one contract. And this is why this video caters to you prop firm traders and traders with smaller accounts less than $20,000. This might not be a risk that you're willing to take. It may be your setup, textbook playbook setup, but it may not be a risk that you're willing to take in terms of the dollar amount that you're going to be risking. You don't want to lose $1,000 on this trade. But say, for example, instead of now saying, I'm not going to get this trade again, let me just risk it because I want to, and take that, and then you end up taking that trade and risking $1,000 and losing it if it does go to your stop. You have the luxury to put on that same trade on the Dow Jones, which is $5 per point. And this is what I talked about, wiggle room for scaling up, for sizing up, is that now you're risking $5 per point per contract. So this, all things else being equal, this trade would have risked $1,000, right, on the Nasdaq. Because the Dow Jones is a quarter of the Nasdaq. Nasdaq is $20, the Dow is $5. It means that instead of risking $1,000, you are risking $250 on this trade. Now that's a risk that you're willing to take. So you can buy your first contract here. And this is personally how I trade, how I size up, right? So now I can buy here when this level gets retested. And when it does get retested, most times price isn't just going to like shoot and start going up. A lot of times price may continue lower, right? So now I have the luxury of allowing price to go against me, knowing damn well that the most I can lose on this trade is $250. And when price does change direction to be on my side, to buttress my idea, at that point, the probability of it moving in my favor is now higher than when I initially bought the market. So now, there's two things you can do here. Well, they're pretty much the same. But what you want to do now, or what I do, is I'm now going to size up to my full size. So say now, I still want to keep it at 250. Because I know that the probability is higher now, there's less reason for this low to get taken. I can raise my stop to this level. So on that one contract, maybe it's no longer $250 I'm risking. Now it's $100. Now I can buy more. I can buy maybe 2 or 3 more contracts and then still have a $250 or $300 or $400 stop, which is still risk I would have been able to take initially. So what I'm saying, and the essence of this video I've come out here to create for you guys, is I stopped trading the Nasdaq because of the risk. A lot of new traders out there, you can't take the psychological capital that it takes from you to lose big on your first trade of the day or your second trade of the day, or in general. It's going to set you on a tilt. It's going to make you want to claw your way back. And then if you're trying to claw your way back, you're taking lesser probability trades and you're still trading the Nasdaq. It's a recipe for failure. I talked about the risk. And then the second thing I talked about is trading an instrument with a smaller point value gives you wiggle room to size up more. You can afford to put on one contract and wait for the market to go against you, or wait for it to go in your favor. And then when you have even higher conviction that now price is moving in my favor, I can size up, I can buy more. So I hope this makes sense to you. I hope that you're able to take the idea and make it work for yourself. I'm not trying to limit you in any way by saying don't trade the Nasdaq. I'm saying that you can still trade the same amount of money you want to put on the market, and you can do it with less risk overall and more conviction. Instead of struggling with your size of stops, because some of you, instead of putting your stops where it makes sense, because you don't want to risk that amount of money, you're going to make your stop unnecessarily too tight, because you're not comfortable with losing the actual amount of money that it would have cost you to lose. Peradventure, you wanted to place your stop at the accurate place. Do you get what I'm saying? And then all that does is that it makes you lose more. You die. What's the phrase? You die by cuts, 1,000 cuts. So instead of taking one big loss, now you're taking like 10 smaller losses because you're not putting your stop in the right places. Whereas when you size down, when you use an instrument with less of a point value, you can actually take the same entry, have your stop where it is, have less risk, and then when price actually begins to move in your favor, you can confidently and courageously scale up, size up more. So I hope this helps you in your trading. This is just something I thought that would have been useful to me when I started my journey, and I wanted to share with you guys. And yeah, love, peace, and blessings from Jah Rastafari.